Okay, if you can hear me all right, once again, I want to thank you so much for attending, and once again, sorry about the delay. Welcome to this presentation of the 3 key elements of a winning Forex strategy. My name is Steven Primo. I am the president and founder of Specialist Trading. For those of you who are unfamiliar with our site, we are an educational company. First and foremost, what we want to do is teach you how to empower yourself with strategies and signals so that you really won't have to rely on an outside source in order to get your ideas on which to trade. You'll be able to take all the information and things that I've accumulated in my 37 years of trading and passed on to you so that you can actually start trading as soon as possible with your own knowledge and with your own decision-making process. So that's what we do at Specialist Trading. I've been trading for 37 years, and I basically teach and mentor all of my students. So before we begin in today's presentation, I just want to make sure that you view our disclaimer. I'm going to show you a lot of performance results with the information I'm going to be giving you today. But remember that we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin today's presentation. Excuse me. Once again, just want to make sure that I'm coming through loud and clear because, as I stated, we started a little late here, and I know that we had a little problem with the communication and connecting, but as long as we're coming through and you can hear me, I will continue. Now, FX Street has provided for us a microsite, so if you want to get more information regarding my website, you can go to this large link right here. We've shortened it and abbreviated it so that you can just actually copy this link right here and get all the information concerning this. I'll pass on. I'm going to be showing you this later on in the presentation, but it'll take you to this microsite here where you'll get more information, course descriptions, information about what we actually teach, a little bio about myself, and so you'll know a little bit more, and that's been provided for us by FX Street. Just go to that link, which I'll give you later on today. Also, I want to mention we are now on Twitter, so you can follow us there. We've had some really nice signals that have been posted and generated for the people. You can follow our handle at SPCLSTTRADG. We just recently posted a really nice signal, so you can go there and check us out. All of the entry posts and all of the actual entry signals are for our members only, but once we're in the signal, only provide them for the people on Twitter. All right, as I stated, first and foremost, Specialist Trading is an educational company. We're really about teaching you. And as I stated, I've also been trading 37 years, and I know how difficult it is to trade in any market, whether it's Forex, stocks, or E-minis. And I know that the majority of most traders, especially first-time traders, lose. And when I say lose, I don't mean that you go into a small drawdown. I mean that you literally lose everything you've saved up for trading. I've really thought a lot about this and looked at my own background, and I think what it is that what my mentors taught me, too, is that the reason why we lose or go into a difficult time is because we put too much stress or too much importance on what an outside source is telling us what to do. Now, this outside source can either be, a trading room or a chat room. It can be some trading guru, or it can be a reliance on too many indicators or too many programs. You can be relying too much on buy and sell, overbought, oversold, indicators, patterns, support and resistance. There's so much reliance on these that you take yourself out of the game. My mentors taught me is that, Steve, the market is basically telling you everything you need to know. There's no reason to listen to anything else. So once I started realizing that and focusing on that, my trading started to turn around. So there's no purpose in relying on outside sources. Like I said, too many indicators, too many trading rooms or chat rooms, too many trading gurus, support and resistance, buy and sell lines. It just overcomplicates your trading. Once you simplify it, which is what we do at Specialist Trading, you'll have all the resources you need, and you'll be able to generate your own signals and empower yourself. So that's what we're all about. So here's what you're going to learn today. I'm going to teach you how to trade in sync. And the easiest and simplest way of trading in sync, that's what I'm going to share with you today. I know a lot of people think they know how to trade in sync with the market. That's what we're taught, but I'm going to show you a very simple but powerful way. I'm going to share with you a price bar pattern. That is a tremendous clue as to the direction of the market. And then I'm going to show you an entry technique that you can apply to virtually any trading strategy that you'd like. And then I'm going to sum it up and share with you how this all comes together in probably one of our most consistent strategies, which is strategy number 4. And the reason it's so consistent is because it works in any direction, in any time frame. And also the beauty of strategy number 4 is that you can trade it for stocks, you can trade it for E-minis, You can trade it in long-term trading, short-term, intraday trading. Doesn't matter what market, doesn't matter what direction. So it's a great, great strategy, and I'm going to share with you some of the recent signals in strategy number 4. All right, so let's first start out with buy. Let's say we want to be a buyer. What are we looking for with the education I'm going to be giving you today? First thing you want to do, key number 1 is you must be in sync with the trend. I know everyone knows this. This is nothing new. You've all been taught this. I'm sure everyone in the world has an idea of what the trend is. But one of the reasons why most people lose is because they have a different idea of what the trend should be. Some people say the trend is based off of fundamental news. Other people say the trend is based off of indicators. Well, that's why, once again, you overcomplicate your trading. You're relying on too many outside sources to come up with a decision. Let's keep it simple. Now, if we look at this chart right here, someone just off face value would say, well, Steve, there is no trend here. As you can see, we're just kind of going down. We go back up. We go back down. So there's really no trend. We're in a range here. Well, that's not really true. According to what we use at Specialist Trading is the 50-period simple moving average. So I want you to plot a 50-period simple moving average, and it doesn't matter if this chart were a 5-minute chart or a monthly chart. We ask ourselves, where is price in relation to that 50-period simple moving average? And if price is above the way it is right here, well, then the overall trend is up. That's it. We don't have to look at volume. We don't have to look at support and resistance. We don't have to look at what trading gurus are saying. That's it. Keep it simple, okay? Most traders who have been trading for years, and I don't mean 5 or 10, I mean 20, 30, 40 years, have the simplest of rules. And these are the things that have worked for them. So keep things simple. Don't feel you have to rely on some advanced program. You have to subscribe to something. Just learn the basics, and you'll get on that road to consistency. So ask yourselves where price is in relation to the 50-period simple moving average. If price is above, well, then we're only going to be looking for buy setups. But this doesn't mean we're simply going to buy at the market. We have to look for some type of setup. So this brings us to key number 2, which is look for a bar that closes in the top 25% of its range. All right, so we go back to this chart again, and we want to see the bars that have closed in the top 25%. Obviously, these bars that are dark are closing towards the bottom, but these ones here we highlighted in green are all closing in the top 25%. Now, by 25%, we mean that you take the very high, not the high of the body or the open body, but the high of the candle. It doesn't matter if we're looking at candlestick bars or if we're looking at high, low, close bar. You just look at the very high for that bar and the very low and see if we close in the top 25% of that. In other words, if you divided this by 4, the top fourth, okay? And these 3 bars did. All right, so this is what we're looking for. This is the market, not an outside source, but the actual chart you're looking at is giving you a clue as to which direction it wants to go. These are great, great clues. But we have to put a little bit more structure to it. So this brings us to key number 3. And that is if we want to enter, we're going to enter upon the confirmation of trend. All right, so what exactly is that? Here's our confirmation method in this particular context. So we're going to buy, but on the next bar only. So we can only look at one bar only. And that's if the price trades 1 to 5 pips above the bar that closed in the top 25% of its range. So you saw those bars that we looked at earlier here in green. If the next bar trades above the high of these bars in green, then we're going to use that as an entry technique. All right, so right here, did the next bar trade above this high? No, it didn't. So there's no entry right here. How about this bar right here? Did the next bar close? Yes, it did. So you would have entered, and you had a nice little run up here, about 4 or 5 bars. All right. How about right here? We close in the top 25%. We want to see the very next bar. We don't want to wait for 10 or 12 bars, but the very next bar, trade above. You enter, and you go straight up. You see how simple that is? We didn't have to look at any fundamental news. We didn't care if an economic report came out. We don't concern ourselves with outside sources. We didn't care if we're looking at support and resistance or buy and sell line. We don't care about that. We just listen to what the market's telling us. And the market was telling us that we're above the 50, so our overall trend is up. It's showing us some clues here that we close in the top 25%. And so if we trade above those on the next bar, well, most likely the market is telling us it wants to go higher. That's it. It's that simple. Keep things as simple as possible, and it'll get on the road to consistency. All right, so we want to just use the exact same rules if we're going short. We're just going to turn everything upside down, okay? So let's look at the same rules to go short. Once again, key number 1 is we must trade in sync with the trend. Okay? So, here we have another setup here. Someone just looking at this would say, well, there's really no trend. We're waiting for some economic report, or my support and resistance doesn't give me any trend, so I'm staying out of the market. Too complicated. All you have to do is apply a 50-period simple moving average and ask yourselves, where is price, or the majority of price, in relation to this moving average? If it's below the way it is here, then your overall trend is down. That's it. It doesn't have to be complicated. So in this scenario, we're looking at an overall downtrend, meaning that if the trend is down, we're only looking for short setups. We're never, ever going to look to buy if we're below the 50 period. Likewise, we're never going to look to sell if we're above the 50 period. So with this scenario right here, someone would say, well, the market is just trending sideways. It's waiting for some report. Whereas you would say now, the savvy investor, no, the market is in an overall downtrend. It's looking to go lower. Okay? Now we're going to look for a bar that closes in the bottom 25% of its range. All right, so we look at these bars here, and these bars in red all closed in the bottom 25%. Remember, the bottom 25% just means the very top of the high of that day and the very low, the low of that day, and then it's the bottom 25%, the bottom quarter. We have 4 specific clues here that the market is telling us it wanted to go lower. Now, this doesn't work like clockwork all the time, but we can enter upon the confirmation trend again by selling on the next bar only if price trades 1 to 5 pips below the bar that closed in the bottom 25%. So in other words, we see here that we have 3 bars that closed, but nothing really happened. Even though you could have entered all of these places right here, there wasn't really much of a move down. But as we see here, we have 1 more bar here that closed lower. We could have taken advantage of this and entered and ultimately taken advantage. Why? Because the market, not some pattern or not some economic report, but the market was telling us it was most likely going lower because we were below the 50, and it was giving us clues that bars were closing in the bottom 25%. And as soon as we started going into the steep downtrend, look at all the other bars closing in the bottom 25%. You could have taken advantage of all these. So oftentimes, as we see here, you have to stick around for a little bit before it kicks in. Okay? Does that all make sense to everyone? Do you see how this all applies and how you can, learn to listen to the market? Once again, just let me ask one. If I'm coming through loud and clear, just kind of make sure you say yes. I know I started a little late here and I didn't get a chance to do a sound check, so I just want to make sure you're hearing me. So kindly answer yes or no if I'm coming through. Okay, thank you. Thank you for the people at FX Street. Sometimes I think I'm giving webinars and they can't hear me if I don't see any response. Okay, so we've seen now that we've gotten all these 3 key elements that will help us get in sync. It will show us a clue of what the market wants to do, and then we have this entry technique. But as of right now, I've only given you 3 key elements of a trading strategy. Please remember that this is not a trading strategy, okay? This is not an actual idea or method in which to trade. I've only given you 3 pieces of the puzzle. In order to have a valid trading strategy, you need usually about 5 or 6 rules, okay? So I've only given you about 3. We still have to have a little bit more structure. So we still need to know how to apply this. I see some people are asking questions. How do we see if something is in the bottom 25%? Let me just say real quickly, I know a lot of people get stuck on candlestick bars and saying, well, can we use candlesticks? It doesn't matter if you're looking at a candlestick bar or if you're looking at an open, high, low, close bar. It doesn't matter. All we want to do is see that we took the high, which would have been right here, the high of this day, and the low, okay? Let's say this was, just to make things easier, let's say this was 400 pips from top to bottom. That was the range, all right? So you know that the bottom 25% is the last 100 pips. So if we close in the bottom 100 pips, because we divided it by 4, then we know that we have closed in the bottom 25% of its range. All you want to do is take the measurement, the range from top to bottom, divide it by 4, and if you close in the bottom fourth, that's the bottom 25%, okay? And you would just do the reverse. If you took the bottom to the top, divided by 4, divide that range, whatever that is, however many pips that is, and then see if you close in the top 25%, which we did here. But the only reason we don't care about this is because we're below the 50-period simple moving average. Okay? Makes sense? Now, as I stated, These are just pieces of the puzzle, extremely important pieces of the puzzle, but they're just pieces of the puzzle. Please do not say, wow, this is amazing. I'm going to start trading this today or tomorrow, okay? This is not a strategy. A lot of people, what they do is they say, Steve, can you send me the video of that webinar you did? Because I want to see that strategy. This is not a strategy. I've just given you 3 pieces of the puzzle, but they don't make up the entire strategy. Now, how can we put this into a strategy? Once again, I stated strategy number 4 is probably our most consistent and popular strategy. It works in any market, in any time frame, and it employs the 3 things I just shared with you. But it also has a couple of other rules which I can't share with you because that's for the members who purchase the strategy. But let me just show you how it works, some of the highlights of the particular strategy. This strategy, even though it's one of our best, our most consistent, is for all traders. So it doesn't matter if you've been trading for 2 weeks or if you've been trading for 20 years. We have hedge fund traders, trading strategy number 4. We have people that have just been trading for a week or 2, trading strategy 4. The same exact rules, okay? So it doesn't matter how long. Don't feel, well, Steve, I'm not that advanced. I guess this would be a little bit too complicated for me. We are an educational company, and we stay with you. We walk with you through the trade and through the actual signals so you can really learn how to do it on your own. This is for traders looking to catch quick momentum moves, okay? So it's not something that you're going to be in the market for weeks or months. You can if you want to. We teach you how to exploit that and stay in the trade longer if you like. But it's really, you're in there for any from 1 to 3 bars. It could be 1 to 3 5-minute bars. It could be 1 to 3 weekly bars. It just depends on what time frame you choose. Its intensity level from 1 to 3, with 1 being the most intense, 3 being the least, is 2. That's very moderate. It only uses 1 indicator. Why? Because it's mainly a pattern recognition strategy. Excuse me. So it's so simple. It's extremely simple. This strategy was taught to me on the floor roughly when I was trading, and I've been using it ever since. Remember, it can apply to any time frame, any direction, and the beauty of it is you can apply to any market. So if you trade the Forex, but you also like to trade stocks, you can use this on any market. And then lastly, our edge is consistency. I'm not going to sit here and tell you that every trade is a winner and every trade will make you 500% on your capital. I'm not going to tell you that. I'm going to tell you, though, that this is extremely, extremely simple to use, and it has extreme consistency. In other words, 2 steps forward, 1 step back. And in my 37 years of trading, this is what will make you successful. Not some strategy or some technique that someone promises you the world, but something that is consistent. Because traders who've been trading for 30, 40, 50 years are all about consistency. They're not concerned about hitting home runs. Every once in a while they will hit a home run, but they're more concerned about they'll have a technique that will stand the test of time. It doesn't matter if they hit a home run and then lose everything. What you should be more concerned about is a technique that is consistent. 2 steps forward, 1 step back. And that's what strategy number 4 gives you. All right, so let's look at some examples here. I'm going to show you some older ones just to show you how consistent it is. And then I'll show you some current examples, things that happened just last week or just in the last few days. All right, here's an older chart of the euro dollar. We ask ourselves, where is price in relation to the 50-period simple moving average? Obviously, price is above. So this meant in this particular time frame, a year or so, we're only looking to go long the euro dollar. So we look for strategy 4 setups and look at all the buy setups here. Now, every one of these setups here was a winner of roughly a minimum of 100 pips, except for this one right here. So this is what I mean by consistency. I'm not going to promise you that every trade works out, but this one you would have entered, and it wouldn't have done very well. You would have been stopped out with a minor loss. But look at all the other winners here. Look at all the gains you could have had. All right? Each one was a minimum of roughly about 100 pip gain. Now, this works to the downside. Here's an older chart of the Australian dollar. Where is price in relation to the 50 period? Price is below. So you don't have to wait for some guru or some chat room to tell you what you should be doing. Automatically, you know that you're only going to be looking to go short if price is below the 50. You see how you're empowering yourself with this information? You don't have to rely on some news report or some economic condition or some trading guru. The market is telling you what it wants to do. It's telling you it wants to go lower. And then you apply all the rules of the strategy and look at all the sell signals you could have been profitable on. Okay? This is how consistent, how beautiful and simple this strategy is. Now, more recently, this was just about 3 weeks ago, all of our members were privy and I hope took this signal we had in the euro yen. This is the daily bar of the euro yen. As you can see here, price was above the 50-period simple moving average. So up until this point, we were looking for buy setups. But right here, we crossed below, we have a bar that closed in the bottom 25%, and it met all of the rules that I haven't shared with you for strategy number 4. There's only about 2 or 3 more rules that I haven't divulged. But it met all the rules, so you would have entered. Once again, we traded on the next bar, just below the low of this bar, to go short. And you had a nice 200 pip move to the downside in roughly about 5 days. Okay, that's how simple it was. Now remember, all the rules for the stop placement, for exit, for things like that are reserved for members of specialist trading. I can't give away everything because that's part of the rules of the strategy. How about British pound? We look back here in November, about 3 or 4 months ago, on a weekly chart now, different time frame. Here was a buy signal. You would have entered, and look at all the gains you could have made. Forget about what people were saying about the British pound. Forget about what was in the news. Forget about market conditions. Forget about what's going on in some chat room. All you do is follow what the market says, and you had a very nice trade. And then look at what happened last week. On the 7th, we issued a buy signal for the British pound. Okay? All of our members saw this on a weekly basis. We'd be trading in a weekly time frame. And once again, we didn't care what's going on economically. We don't care what's going on the market. We're above the 50, so we're only looking to go long. We're looking for our setup, which is right here. And we entered on last week. And look at the gains we had in the British pound. Don't care about support and resistance. We don't care about buy-sell line. We don't care about those things. They only make trading complicated. Remember, most traders lose because their rules are too complicated, or they're learning something that's too complicated to understand. It's too subjective. We want to just have something cut and dry with about 4 or 5 rules, follow them, and have this consistency on our trading. So this was a great signal just from last week to go along the British pound. How about a monthly chart? Well, this goes back a couple of years ago, but you saw how we could have gotten short the Swiss franc. We're below the 50 period. Same rules apply regardless of time frame. We closed on the bottom 25%. You could have gone short here in August of 2012, about 500 pips or so, real simple. Here's a 2-hour chart of the British pound last week. This was just last week. Once again, if you saw that big buy signal on the weekly time frame, you could have said, well, that's a little bit too risky. I can't hold positions that long. I like to day trade or intraday trade. But you could have gone to a 2-hour chart here. And once we were in the longer time frame buy signal, you could have gone and looked for buy signals in a smaller time frame. And you see here, all last week, here's a buy signal. Could have made roughly about 50 to 70 pips. Here's another one. You could have made 100 pips. And here was another one on Friday. These were all strategy number 4 buy signals. We don't care about what the outside world is saying. We only care about what the market is saying. And we go to its 10-minute time frame. Here's the Canadian dollar. This was last Friday, okay? We see here that price was selling off, and we're looking for a bar that closes in the top 25%. Now, this one closed in the top 25%, but we never traded above it on the next bar. See that? Remember, our rule was we have to trade above it on the very next bar. We never did, so there was no trade there. This bar closed in the top 25% from bottom to top. The very next bar closed above it, so we entered long and rode this all the way up. This was on Friday in the Canadian dollar. So you see how this strategy is so simple, and it works in any time frame, in any direction. So let's recap. We taught you how to be in sync with the trend. Don't make your trading complicated. Don't look at outside sources to tell you what to do. The market is telling you everything you need to know. If you're thinking of what the trend is, just apply a 50-period simple moving average. It doesn't matter if it's a 5-minute time frame or an hourly or a monthly. And if price is above, then the overall trend is up. That's it. If price is below, the overall trend is down. And you only want to trade in sync with the trend. So if the overall trend is up, you're only going to be looking for buy setups. If the overall trend is down, you'll only be looking for sell setups. That's it. Once we find the trend, we go to key number 2. Look for a bar that closes either in the top 25% or the bottom 25%. Why? Because this is a clue that the market, not an outside source, not some website or some trader or some teacher, but the market is telling you it most likely wants to go higher. If it closes in the top 25% or in the bottom 25%, it most likely wants to go lower. So look for these clues. It's a simple clue of the market closing in the top of its range or the bottom of its range. And then lastly, you can apply this entry technique, okay? You can apply an entry technique where you just simply look to go long if price trades 1 to 5 pips above that 25% bar, or go short if price trades below, okay? And the beauty of this, I see people saying, well, what about rangy market? Well, this will keep you out of rangy markets, okay? This will keep you out of ranging markets because you won't see the market will not be giving you these signals. It'll be more, you won't be seeing a lot of bars closing in the top or bottom because you're pretty much going sideways. And when I talk about intensity level, I just talk about it in terms of following strategies. We all know about how difficult it is sometimes. You think, boy, this guy, I went to his webinar, this is great. This strategy looks fantastic, generates 500% a month. It looks great. He promised the world. And then you buy it, and you follow all the rules, and you go, this is too hard to do. I can't sit here. I have to watch every second, every tick. So that's a very intense strategy. And a very relaxed strategy is one where you can just enter your orders and walk away. So that's a very relaxed strategy. So strategy number 4 is right in the middle. Okay? It can be intensive sometimes if you want to trade it intraday. But if you want to trade it, just very commonly, it's very relaxed. So it's right there in the middle. It's very moderate. Okay? So I hope that answers your question. Yes, we have relaxed strategies as well too. We have strategies where you can just, put your orders in and walk away. We have a number of strategies. As you see, this is strategy number 4. We have strategies 1, 2, 3, 4. We have strategy 5, which is probably our top strategy, which is extremely easy to use, strategy number 5. But we're talking about strategy number 4 today. And we shared all of these things with you, the simplicity of the market. We shared everything, and then we told you how these 3 key elements make up one of our best strategies, which is strategy number 4. Okay? So we shared all this with you. Now, if I can just take a moment here, I want to invite all of you to become members of strategy number 4 and to become members of Specialist Trading by purchasing the course. This is, as you see here, we see a box that says E-mini, but this strategy works in any market. As you can see, stocks, E-mini, ETFs, Forex. So that's the beauty. If you become a member of Specialist Trading with strategy number 4 course, you can use this in any market you like. So it's almost like, 2 for 1 or 3 or 4 for 1. You get instant course access, detailed instruction, 5 videos. People were asking, where do I put my stop? Where exactly do I enter? Where do I exit? This is all explained in the course for members only. You can't give that information away because that wouldn't be fair to the people that actually purchase the course. We also provide you with signal alerts. We give you signal alerts so that you can actually, see this on a daily basis, such as we post to our members. The night before, we tell you there's a buy signal in the euro yen, or there's a short signal in the Australian dollar. You get an archived weekly video trading lessons, okay, different lessons on which to highlight your trading. You get a free add-on or signal scanner. So on your chart, you can apply this, so it'll give you a little buy or sell arrow telling you when a signal has been generated. And then lastly, you get access to my personal email. The signals you'll get for a year, okay? The signal alerts last for a year, but you won't need them after a year because you'll know how to see them yourself. I mean, most of our students learn any of our strategies after a couple of weeks. They don't rely on the emails we send them the night before. They know already that there's a signal, and they're already getting ready to enter their orders. Now, here's the special deal we're offering for all the people that attended today, and because it's President's Day in the United States, you're going to get a 2-for-1 attendee special. We're going to throw something in that, in my opinion, is just as important and will help you with your trading. This is the PET D. So in this special offer, we're going to throw in the PET D, which is just the abbreviation for the Primo Early Trend Detector. We shared with you the 50-period simple moving average, which is for overall trend. The Early Trend Detector is only for short-term trend. It's a proprietary color bar algorithm. It colors the bars when it shows that you're in an uptrend, as you see right here. So all of the bars, or majority of the bars, are green, you're in an uptrend. All of the bars and majority of bars are red. You're in a downtrend. So as we see here, we look at the British pound. This chart is up until Friday. All right, someone could say, wow, we're gone up, we've gone down. This is hard to tell. Well, we apply the PET D, all the green bars while we're up. It turns red while we're down, and then green going back up. So we knew the first week of February that we were already starting an uptrend. Okay? Same thing happens if you look at a 4-hour chart. The euro dollar, this was up until this Friday, last week, okay? All the bars are green, they turn red in the sell-off, and then we turn green when we're going back up. The beauty of it, if you're an E-mini trader, you can apply it to the E-mini. If it's an intraday chart of the E-mini, how this could have helped you. Or you can apply it to stocks. Do you think this could have helped you with UPS? The minute we turned red here, look how it highlighted the short-term downtrend trend. And if you want to use it long-term, here's a S&P chart going all the way back to 1995, all the up and down moves. Look how the PET D perfectly captured the majority of bars here, telling you in advance. So we're throwing this in with the strategy number 4 course. This usually would cost you roughly about $2,000. We're discounting both of these things down to $1,495 altogether for the attendees today. And we do have payment plans. So if you're interested in, if $14.95 is a little bit too much for both these things, you can have a payment plan and you can structure it where you pay monthly. Okay? I also just want to share with you one last thing. Here is the signal that was generated this past week to go long the euro yen on a weekly basis. So you may want to check this out. This was a chart as of last week. We closed in the top 25%. Okay? We also were totally green on a weekly basis. We had one red bar telling us that we might have a short-term downward move, but guess what? Last week or 2 weeks ago, we turned up green, telling us that the trend has resumed upward. You may want to watch this. This is a signal that I'm sharing with you that most of our members are in, but we're just sharing with you to show you how this may work, and you can follow this to see the power of it. Remember, here's our special for all the people who want to join specialist trading. This is really more of a mentoring course because I'm going to share with you. I have a personal email, and you can also contact me through email, and I can discuss things with you. And remember, if you want more information with what FX Freedom provided for us, here's the link. You can go to the abbreviated link, and you'll get more information about course descriptions as well as myself and any method that you're interested in. And any questions, you can apply them to trading at Pro Trader Strategies. You can talk to one of our trading consultants. These are the people that actually do the marketing and selling for us. You can call us directly, okay? I'm going to take some questions here in our last 20 minutes or so. I know a lot of you may have had questions we're asking. I'm going to go back here. And first person asks, Steve, please confirm if there's no specific time frame in which this technique is especially effective. No, there isn't. I mean, I use it intraday, but I also use it for daily bars. We have a number of our members who use strategy number 4 on weekly bars, as you just saw, and then they will go down to a smaller time frame. Now, I don't use it that way. I've never really found any consistency in it, but a number of our members swear by it. So they will look for a signal in a higher time frame and not take that signal, but just say, well, if the euro yen is going to be going higher, well, then I'm going to a smaller time frame and look for signals on a smaller time frame using the same exact strategy. Okay? So it works. I would say it works just as equally well in any time frame. Remember, we're not promising you that every trade is a winner. I showed you a couple of examples where we had losers. But what I'm promising you is that there is consistency in this. So that's the beauty of strategy number 4. Okay? All right, let me see here. Adam says, how do you measure the 25% bar? I think I may have answered that earlier, Adam, but remember, the thing where people get caught up in this is that they think, well, you know, if I'm looking at a candlestick, how do I measure? It doesn't matter whether you're looking at a candlestick bar or whether you're looking at an open, high, low, closed bar, the straight average bars. All you want to do is take the high of that day, or if it's a 5-minute bar, the high of that 5 minutes, and the low of that, and just find out what the range was. In other words, how many pips did you move in that range from top to bottom? And then divide by 4. All right? And that will tell you the top 25% or the bottom 25%. And that's it. If something closed in the top 25% and you're above the 50-period simple moving average, well, that's a clue that you're going higher. Same thing if you close below the 50-period simple moving average and the bar closed in the bottom quarter of its range, then you're most likely going lower. It's a great clue that the market is giving you. All right? This was all taught to me the exact same way I'm teaching it to you, and my eyes were just open wide. I couldn't believe it. I go, boy, you mean I don't have to rely on these subscriptions and these trading gurus? I don't have to look at all these indicators and support and resistance areas? No, they said. Just look at these bars and look what the market's telling you. And that's it. It's that simple. And that's how you get on that road to consistency. I think Drew was asking about moderately intense. I believe I answered that earlier. As well as the question about stop. Remember, we have roughly about 4 different stop placements for our members. There's not just one. And these are our proprietary stops, different stops and things that I was taught on the floor. And they're part of the course, so I don't really want to share a lot of that because it wouldn't be fair to the people who are members of the course. People are asking, Boyke's asking, do we have strategies for ranging or sideways markets? Not really, because you don't get that consistency in range or sideways markets. Most people, when they choose to trade in a rangy or a sideways market, will pick some type of an overbought, oversold type of strategy. And that's fine, but there's a crutch in that because once you break out of that range, you're most likely going to give everything back on the first trade where you sell and it breaks out and goes straight up. And so you'll get killed and you'll keep on using this strategy until you pretty much see that, well, I guess we're no longer in a range. I guess I should switch over. But by that time, you've lost everything you made while you were in the short range. So I don't like to really get involved in trading for ranges. It's best just to sit out, and there are other markets to follow. If one market's in a range, go to a different currency pair, or go to a different stock, or a different future, you know. So I would stay away from range markets and range market techniques, because once the range ends, you're going to continue to trade in that range method, and you're going to most likely give everything back that you made, okay? Let's see any more questions here. Do we have relaxed strategies on level 3? Yes, we have many relaxed strategies. I think I may have answered this. As I stated, strategy number 5 is a much more relaxed strategy. It's probably our most popular strategy, and it does extremely well. But that's you can call up at this phone number here, or you can contact one of our trading reps at trading@proprietarystrategies.com, and they'll give you more information. But I would just want to talk more about strategy number 4 today, because we have that special discount. Remember, if you're interested in taking your trading to the next level, I would really take advantage of the discount we share with you today, because I'm giving you 2 of our great methods and great packages in one. And we've really discounted the price. And as we stated, we're going to work with you if you want to have any type of payment plan as well. Look, yeah, so you don't watch any economic data releases. No, we don't. We really do not care about it. Now, having said that, we have students who are just brainwashed from educators or from people. I know I was. I used to watch every economic data report when I was on the floor of the stock exchange. I started out on the floor, and I was taught you need to know everything about your stock. You need to know everything about the market. You need to know every economic report, jobless claims, what's going on in different countries. And I did, and guess what? It didn't make me any more successful. In fact, I kept losing more money. And I thought, I'm doing everything I've been taught. I'm using all conventional wisdom. I'm looking at every financial report. I'm looking at every indicator. I'm subscribing to every newsletter. We didn't have trading rooms and chat rooms then. There was no internet. But I had to subscribe to newsletters. I looked at every support and resistance line, and nothing worked. I was losing more money than I was making. My mentors, who were also traders on the floor, who'd been trading for about 50 years, saw how much I was struggling, and they shared with me these techniques. And guess what? The minute I threw away all of these things that for some reason were taught are going to make us successful, that's when I started getting consistent. So I didn't care anymore about news reports, jobless claims, what's going on in the economy. All I cared about was what the market was telling me. Now, we have a number of students who, as I said, who have been brainwashed to think that that's what will make you successful. And so I said, listen, if that's what really, worries you, or to take a signal when a news report is coming out, then don't take it. You don't have to. There's going to be another one coming up. And if you really feel that you must wait, then just wait and then still apply the rules to the signal. Okay? But if you miss the trade, don't blame me, because the market doesn't care about economic reports. It doesn't. The market is always telling you what it's going to do. Okay? So it doesn't care. It's investors that care about that. So don't get involved in all that and indicators and volume and such. I don't look at volume. I don't look at any of that. And I've been trading for nearly 40 years. So as I stated in the beginning, we're an educational company. And the reason I think most traders lose, especially in the beginning, is because you overcomplicate your trading. You think that these things, for some reason we've been taught, will make you successful. And it's been my experience that they actually do the opposite. They're the things that make you unsuccessful. And I say this not from trying to judge people, but because this is the way I traded. This is what happened to me. So as soon as I had the courage to let go of these things, then I started, getting consistent. So this is what our goal is to all of our members and all of our students. And we have tremendous testimonials from students who said, I've been trading for 5 years. I haven't made a dime. The first month I started becoming successful. It's because you're letting go of conventional wisdom, which in my opinion doesn't work. If it did work, then everyone would be a millionaire. Everyone would be rich. It doesn't work. It really doesn't. Okay. It only serves to take you down that road to being unsuccessful. So this is what we try. I know this flies in the face of what you've been taught and what other educators teach you, and that's okay. Everyone has a different road to getting to where they want. I'm just sharing with you what has worked for me and what works for all of our students. We have our strategies are now traded in over 60 countries around the world. So we must be doing something right. Once again, hedge fund traders trade our strategies, and people who have been trading for a couple of weeks trade our strategies. So there's no difference. You don't have to be trading for a long time. You don't have to be a brand new person to trading. It doesn't matter what your experience or level is. You can use these things to help elevate your trading. take a few more questions before we close here. Let me just go to the bottom here. One of the persons is asking, how can we avoid rangy markets? Well, one of the best things you can avoid is that simple tool I shared with you, the 50-period simple moving average. Now, I'm not going to promise you that you avoid all rangy markets. You can't. There's no way you can ever do that. But you can. One of the ways you can simply avoid this is by using the 50-period. Many times, in a rangy market, price will cross above the 50 and then below it, and then above it and below it. And because it's crossing above and below, it won't give you any clear signal. So by not giving you a clear signal, you're out of the market. You're on the sideline. So it's doing you a favor. So many times as I've stated, it's best to be on the sidelines in a ranging market, not trying to trade it. So I give you that free tool, the 50-period simple moving average. Go ahead and use it and see how it could have helped you. In fact, go back to your last 10, 20 trades and apply the 50-period moving average the way I said to. If price is above, you should only have taken long signals. If price is below, you should only have taken short signals. I can almost guarantee that the majority of your losers will be because you would have been out of sync with this. You would have gone long when price was below and gone short when price is above. So go back and look at it and see for yourself how well this tool could have helped you or not, okay? But one of the things we always do at Specialist Trading is every presentation we try to give you something so that you can use. Even if you don't want to become a member, even if you don't want to take advantage of our discounts and our methods, we still want to give you something that you can apply, such as that confirmation entry method, such as the 25% range bar, such as the 50-period. I gave you 3 great techniques and 3 great keys today for free that you can start using if you like, even if you don't want to become a member. So I don't know if a lot of other members or educators that do this. We always teach you something. So whether you decide to join us as a member or not, you can still use. I think that shows our sincerity and how well we want to educate all traders, okay? So Boyke asks, do I ever consider fundamentals? No, I stopped looking at fundamentals probably in the 90s. I just don't consider them. It doesn't have anything to do. And we have strategy figures for the signals we've generated going back 3 years, because that's when we started generating our signals for our members. And these are actual real world signals. Strategy number 4, number 5, number 6, all signals. And some of our methods are up 30, 40% in 3 years. Some are up 60, 70%. And these are all based on signals that were generated with no regard if there was a fundamental, report coming out that day, or if something terrible was going on around the world. We didn't care. We just generated the signals by what the method was telling us. And so it shows you how consistent these methods are, being up 30, 40, 50, 60% with no regard for fundamentals. And these are real world statistics. They're not hypothetical going back 20 years and saying, well, we applied this hypothetically and you would be up 200%. No, these are real world signals that we provide for our members. So once again, we don't consider the news. We don't consider fundamentals. If these things were so important, then everyone should be able to be a millionaire right now. But they're too subjective. One person will take a fundamental report of the news and say it's bullish. Another person will look at the same report and say, no, that's bearish. Remember, this is overcomplicating your trading. We want to keep it simple. So if something is simple, everyone should come to the same conclusion. But you should never have two people look at a support and resistance, and one person will say, well, that's support, and the other person would say, no, that's resistance. You don't want things that are left up in the air. It's too subjective. Everything we have at Specialist Trading is cut and dry. In other words, you're going to see that it closes in the top 25%. No one's going to dispute that. You're going to see that price is above the 50 period. You can't dispute that. You can't say, well, no, actually it could be below. No, it's either yes it is or no it's not. So you don't want people coming and looking at the same support and resistance, the same indicator, and getting two different opinions. So that's what happens with news and with fundamental reports. They're too subjective. And once you start getting to be subjective, you overcomplicate your trading. Once again, I'm not saying this to put anyone down or to judge. I'm speaking from past experience. This is the way my trading was, and I wasn't successful. I couldn't make a dime. So it wasn't until I had the courage to let go of these things that I started to be consistent. So if you have the courage and want to take that step, we invite you to become members of Specialist Trading, okay? All right, in closing, once again, let me just give you the information. I hope you got the link. I believe they posted the link for our microsite at FX Street. So you can get more information about our courses, our discounts, as well as background about myself. If you'd like to speak to someone at our sister site, which handles all of our marketing, you can call that number, 310-598-6677, or you can simply email us, trading@protraderstrategies.com. I want to thank you all for attending, and once again, if you really want to take your trading to the next level, I urge you to take advantage of the discount that we provided for you. You're going to get 2 great techniques for really the price of one, or less than the price of one. And we have payment plans. So if you have difficulty in meeting that payment, we can work it on a schedule for you so that you don't have to come up with everything all at once, okay? I want to thank you so much for joining me today. Sorry about the little delay. If you have any more questions after this is concluded, remember, just email us or phone us, and we'll answer anything you have. But if you want to take advantage of that discount, that's only for the next couple of days, all right? Thank you so much. For those of you who have the day off or on vacation, have a pleasant 3-day holiday, a 3-day weekend. If not, enjoy your day, and I shall see you next month. Bye-bye.